Good day, everyone. The information I am presenting to you today is not designed for sensationalism, nor is it a collection of mere customer service suggestions. What we are discussing today is a series of direct, urgent regulatory mandates and explicit operational guidelines issued under the authority of the American Bankers Association, the Federal Deposit Insurance Corporation, and major banking institutions across the United States. Federal consumer protection agencies have shifted from issuing standard security advice to enforcing formal, structured warnings. This critical intervention is a direct response to a sophisticated wave of financial exploitation targeting senior citizens. I have spent a significant amount of time analyzing these recent policy directives, statutory updates, and forensic fraud reports, and it is clear that this conversation must occur with absolute transparency. A substantial portion of the public remains entirely unaware of these updated protocols, or perhaps they have misjudged the structural severity of these criminal networks. The regulatory shifts we are covering today directly impact any individual who receives Social Security disbursements, Visa direct deposit or prepaid cards, anyone who visits a physical banking institution, and anyone who utilizes an automated teller machine. Statistically, this encompasses virtually every senior citizen residing in America today. I strongly urge you to review this analysis in its entirety, document the strategic steps outlined, and share this vital resource with your colleagues, family, and peers. Ensuring this information reaches your network is an essential step in collective financial defense. Before we deconstruct these modern banking threats, please take a moment to subscribe to this channel and activate the notification bell. In an era of rapid digital evolution, remaining connected to verified data is paramount. The financial threats appearing in this second quarter of 2026 bear little resemblance to the outdated schemes of recent years. The criminal landscape has undergone a profound technological shift. The emergence of specialized cryptocurrency kiosk networks, the deployment of advanced mechanical cash traps, and sophisticated social engineering tactics are active, documented hazards in 2026. These methods have been verified through forensic audits conducted by federal law enforcement and regulatory bodies this year. Far too many accounts are completely drained before the account holder even recognizes an anomaly. The primary objective of this platform is to track these structural shifts, analyze new federal regulations, and decode emerging threats into clear, actionable intelligence before your wealth is jeopardized. Hundreds of thousands of account holders depend on this precise analysis to maintain institutional awareness. Subscribed viewers are equipped with defensive strategies ahead of time, while unregistered individuals unfortunately tend to discover these systemic vulnerabilities only after a total loss of funds occurs. Protect your capital by subscribing today, and let us begin our core analysis. Let us first examine a physical security threat that has experienced an alarming escalation throughout 2026. This specific threat is currently the subject of mandatory branch alerts across the domestic banking sector. A highly organized scheme is currently operating throughout the United States, designed to drain senior bank accounts in less than a single business afternoon. Crucially, this vector does not originate through email or automated phone calls. Instead, it occurs via direct physical interaction at automated teller machines or within the immediate perimeter of bank branches. Financial institutions are now flatly instructing their depositors to abandon the traditional assumption of public safety at these terminals. The individuals standing in close proximity to you in a financial space can no longer be generalized as innocent bystanders. In the current calendar year of 2026, the American Bankers Association released a high-priority fraud alert following a cluster of carefully executed crimes within metropolitan banking corridors, most notably in Philadelphia and its surrounding regions. Criminal syndicates have been physically altering automated teller machines by inserting mechanical cash traps. This device is an ultra-thin, highly disguised barrier inserted directly inside the physical cash dispenser slot. It is designed to capture, hold, and conceal currency bills the exact moment the internal mechanism dispenses them. When this occurs, the external digital monitor displays the transaction as fully completed. Your account is debited, yet no physical currency appears. The natural human assumption is to attribute this event to a mechanical malfunction or a software error. Most individuals instinctively walk away from the machine to resolve the matter inside the branch or via a phone call later. The moment you vacate the immediate physical space, the criminal steps up to the machine, extracts the trap, and retrieves your cash. The American Bankers Association and the United States Secret Service have jointly escalated their warnings regarding this tactical evolution in 2026. The mandate for account holders is now absolute. If you execute a transaction at an automated teller machine and the currency fails us to dispense despite a successful electronic confirmation, you must not walk away under any circumstances. You must maintain your physical position directly in front of the terminal. You must immediately utilize your mobile device to contact the financial institution from that exact spot, informing them of the failure, so they can place an immediate regulatory flag on the transaction before you exit the perimeter. This brings us to the first foundational rule mandated by banking security executives. Your physical debit or credit card must never leave your hands. It must never be handed to a well-meaning stranger offering assistance. Nor should it ever be handed to a person claiming to be a bank employee outside the secure glass-enclosed teller counter. This policy must be maintained with zero exceptions due to a massive leap in data capture technology. A device known as a skimmer, along with its newer and far more dangerous iteration called a shimmer, can replicate and extract every byte of encrypted data from your card in less than 3 seconds of physical contact. Traditional skimmers were bulky devices placed over the exterior card reader. A modern shimmer, however, is an incredibly thin electronic insert that resides entirely inside the internal card slot itself. It does not read the easily protected magnetic strip. Instead, it reads the encrypted data directly off your internal EMV chip. It is completely invisible to the naked eye, and its presence cannot be detected by tactile feel during insertion. 3 seconds of unauthorized physical custody of your card is all a bad actor requires to clone your financial identity. If you experience operational difficulties while attempting to use an automated teller machine, disregard any offers of assistance from other individuals in line. Walk directly into the secure area of the branch and request the assistance of an officially uniformed, badged employee. If an unknown person approaches you at a terminal and attempts to touch your card or guide your hand, immediately terminate the session and enter the branch. The second institutional rule dictates that your personal identification number must be physically shielded during every single entry, without exception. The official consumer safety literature published by the American Bankers Association outlines this process with zero ambiguity. You must use your non-dominant hand to completely cover the physical keypad from above every single time you input your code, even if the surrounding area appears entirely vacant. Investigative records from 2026 have exposed the widespread use of micro-optical cameras, specialized mirrors, and pinhole recording devices disguised as standard building fixtures, light housings, or promotional holders near keypads. These hidden devices are positioned specifically to capture the hand movements of consumers who believe they are in complete privacy. Furthermore, this protection applies even during interactions with legitimate bank staff. When an official teller assists you with a transaction at a counter, institutional protocol requires that the employee deliberately avert their gaze while you input your code on the customer-facing pad. This action is not a matter of personal courtesy. It is a strict, non-negotiable risk management policy enforced by the bank. If a teller fails to visibly turn away during this process, you must advocate for your security immediately. Request clearly that they turn away while input your personal identification number. This is your absolute right as a consumer, and it aligns perfectly with standard federal banking guidelines. Our third structural rule requires that your mobile phone remain in your physical possession at all times while inside a banking facility. This specific vulnerability frequently catches responsible consumers off guard because society has conditioned us to view a refusal to cooperate as an act of rudeness. A bank employee may approach you under the guise of setting up a mobile banking application, resolving an account access error, or modernizing your profile, and ask you to hand over your unlocked smartphone. While it appears to be a helpful customer service interaction, modern institutional guidance warns sternly against this behavior. Your smartphone, when unlocked with an active, authenticated banking application open, constitutes an unrestricted, high-level administrative portal to your lifetime savings. Recent investigative dossiers show that an unauthorized individual in possession of an unlocked phone for a mere 30 seconds can execute domestic wire transfers, establish their own secondary device as a trusted multi-factor authentication node, or silently download remote access mirror software that grants them permanent, unmonitored control over your digital footprint from a remote location. True institutional assistance involves an employee verbally explaining the necessary steps or pointing to a guide while you personally input the data into your device. If any employee or individual inside a financial institution insists that they must physically hold or manipulate your phone to complete a service task, you must decline and ask to speak directly with the branch manager. This request is entirely professional, completely reasonable, and any legitimate institution will validate and respect your boundary instantly. The fourth rule addresses the most dangerous financial fraud vector flagged by federal agencies in 2026. You must never, under any circumstances or pretext, withdraw physical currency from your bank account and deposit it into a cryptocurrency automated teller machine based on instructions received from an external party. To an objective observer, this rule might sound so fundamental that it shouldn't require explanation. However, statistical reporting from the Federal Bureau of Investigation and the Associated Press confirms that cryptocurrency kiosk fraud has become the single fastest-growing financial crime, targeting the senior demographic across the nation. The individuals who fall victim to these networks are not uneducated or careless. They are frequently highly sharp, professional, and historically diligent individuals. The scam relies on extreme psychological manipulation. It initiates when you receive an urgent voice communication or encrypted message from an individual spoofing the credentials of the Internal Revenue Service, the Social Security Administration, Medicare, or federal law enforcement agencies. These bad actors communicate with an authoritative tone, utilizing legal public data to state your full legal name, address, and precise details regarding your financial history. They inform you that your primary bank accounts have been compromised by an internal investigation, that you have an outstanding immediate tax liability, or that your identity has been stolen, meaning your current liquid assets must be moved to a federal protection locker immediately to avoid total asset forfeiture. They direct you to walk into your local bank branch, execute a large cash withdrawal, often totaling tens of thousands of dollars, and transport that cash directly to a localized Bitcoin or cryptocurrency kiosk. They assure you that feeding the cash into this terminal is the sole approved method to secure your wealth within a temporary government-backed digital wallet. The absolute reality is that the moment those physical bills enter that machine, your capital is permanently gone. The underlying blockchain's ledger ensures that the transaction cannot be reversed, the funds cannot be recalled by your bank, and the receivers cannot be unmasked by traditional law enforcement. The severity of this hazard has caused a massive legislative counter-response. Indiana achieved a historical milestone by passing a complete statutory ban on all public cryptocurrency automated teller machines in March 2026. Tennessee and Minnesota enacted matching prohibitions shortly thereafter. As of May 2026, 30 individual states have successfully passed strict legislative frameworks restricting or completely eliminating crypto kiosk operations due to the devastation of this specific scam. Banks nationwide are now actively training their frontline tellers to conduct emergency interventions when an elderly client requests an anomalous large-scale cash withdrawal. In a vast majority of these intercepted cases, the victim is being actively controlled via a hidden phone call in their pocket while standing at the counter. If a professional bank employee asks you detailed questions regarding the purpose of a substantial cash withdrawal, you must understand that they are not violating your privacy. They are executing a mandatory corporate defense protocol and may represent the final barrier preventing your permanent financial ruin. Federal agencies, law enforcement, and legitimate government bodies will never instruct an individual to convert liquid capital into cryptocurrency. There are no exceptions to this rule. Our fifth operational rule is to read and comprehend every line of text before applying your signature to a document. This vulnerability typically manifests during sit-down phone consultations inside a branch office, where a highly personable relationship manager presents a stack of legal documents. The meeting often moves at a fast pace, making the consumer feel that requesting a pause to read the text would be an institutional inconvenience or a breach of social etiquette. Banks are now formally instructing their clientele to reject this artificial urgency. You possess no legal or operational obligation to sign any document that you have not thoroughly reviewed and understood. The complex legal fine print is where significant, long-term changes are embedded. Automated authorizations for recurring credit line increases. Broad consent forms allowing the sale of your personal metadata to third-party marketing networks. And enrollment clauses for fee-based secondary accounts have all been discovered within documents that consumers signed under time pressure. If paperwork is presented to you and you sense an effort to accelerate the process, state calmly and clearly that you require adequate time to read the text in full. No compliant financial institution can legally mandate a signature under duress or without disclosure. If an employee challenges your request to review the terms, immediately halt the meeting and request a supervisor. If you discover an unrecognized fee or an unapproved account structure on your monthly statement, contact the institution immediately to demand the physical copy of the signed authorization. If you determine that you were pressured into signing an agreement without full transparency, you retain the administrative right to file a formal regulatory complaint with the Consumer Financial Protection Bureau at consumerfinance.gov. Finally, it is critical to familiarize yourself with the newly upgraded Trusted Contact Framework. Banks in a significant majority of states are now legally required to offer a system where you can explicitly designate a verified family member, legal representative, or trusted friend whom the bank is authorized to contact exclusively if their fraud detection systems identify highly unusual account behavior that implies elder exploitation or cognitive manipulation. It is vital to note that this designation does not grant the trusted contact any administrative control over your capital. They cannot execute withdrawals, they cannot view balances, and they cannot alter your account settings. They function strictly as an emergency contact node whom the bank can alert if your account displays signs of an active attack. If your institution provides this security option and you have not yet implemented it, it represents a highly effective layer of institutional defense. To summarize our core protective strategies, mechanical cash traps at automated teller machines are an active threat in 2026. If a machine fails to deliver physical cash, remain at the location and contact your bank immediately. Your debit card must never leave your physical hand under any circumstances. Ensure your personal identification number is completely shielded from hidden cameras during every transaction. Retain physical custody of your mobile device at all times within a branch. Never convert physical wealth into cryptocurrency based on external telephonic instructions, regardless of the perceived authority of the caller. Thoroughly review all documentation before signing, and remember that slowing down the pace of a transaction is your absolute legal right. I strongly recommend establishing a verified trusted contact with your banking institution immediately. Thank you for your time. Please subscribe to remain updated on federal consumer protections. Share this broadcast with those who rely on Social Security, and I will see you in our next detailed brief.